Hello, everyone. Good morning or good afternoon, depending on where you are joining us from today. This is Jody Patterson, Client Care Manager for Oasis Solutions. I want to thank you for joining us for our webinar today. Presentation is going to be on Sales Tax Nexus 101. Our presenter today is Alex Lyons of Avalara. Before we start, I just do want to talk about some quick housekeeping. You will be muted throughout the duration of the webinar. However, we encourage you to enter questions as you think of them in the Q&A window at the bottom center of your Zoom control panel. I will monitor the questions as they come in, and Alex will answer them live as the webinar progresses instead of saving it all for the very end. If we run out of time for the Q&A, we will follow up on any outstanding questions individually offline, so be sure that you put those into the Q&A window. Also want to mention that we will have a couple of polls during the webinar, so please watch for those as they pop up on your screen. Your responses to those polls will help Alex tailor the rest of the discussion. So moving on to introductions, your presenter today is Alex Lyons of Avalara. Alex is a senior sales executive with Avalara. She has been in a consultative selling role for 7 years. The last 3 of those have been with Avalara, helping customers implement Avalara with Sage and other ERP and shopping carts during that time. We've also been working with Avalara, with Alex as our personal dedicated rep for the past 3 years. So do the math. We've been working with Alex since she started with Avalara, and we really value that relationship. Alex, I'm going to turn it over to you to start the presentation.
Absolutely. Thank you so much, Jody. And thank you guys, everyone, for joining. I know that there's probably more exciting things that you could do with your afternoon to talk about sales tax. So I appreciate you guys all taking the time. I kind of want to just start with going over, what is this presentation going to be about? What are we covering? The first thing that we're going to look at is just kind of talk about some of the changes that have been occurring in the sales tax world over the last, not only recently as the last 2 years, but just going back into the last 5 to 10 years, what all has changed in the sales tax world, what are businesses dealing with. I am in a customer facing role where I'm talking to companies every single day, specifically in the Sage channel. So I definitely have a lot of insight into what, Sage users specifically, which are a lot of manufacturers, resellers, distributors, what sorts of things they're dealing with. And so because of that, I want to talk about some of the challenges I see my customers facing as a result of all of these changes. And then ultimately we'll wrap up kind of briefly talking about, if anything that I talk about today, raises a red flag in your head, what can you do to start to sort of address these things? So please, please, please send questions through. I love questions. I don't want to just hear myself talk for an hour. So if anyone has questions, please send them through, and Jody will let me know, and we'll get to those. So to start off, I just want to kind of address, what are some of these changes? Why has complexity around sales tax changed so much over the last, 5 to 10 years? So first things first, the word Nexus, for anyone that may not be familiar, because you're going to hear that word a lot throughout this presentation, the word Nexus in this context simply means a company's obligation to collect and remit sales tax. So just keep that in mind. If you have Nexus, for most companies, that's going to be wherever you're registered today to file a sales tax return. So for the purposes of this discussion, we're going to be talking about, if there are changes that you might need to make to where your Nexus actually lies. So the first thing we'll sort of talk about is just how the sales tax landscape is just very complex, and it is constantly changing. Over the last couple of years, I'm sure most people who are in an accounting role have heard of the Wayfair ruling. I'm going to talk a little bit about that. That's a very highly publicized change to sales tax. But there have also been a lot of not so publicized changes. There's been lots of changes to physical obligation or physical Nexus. Along with that, the rules around Nexus are changing constantly. So once you even know where you're supposed to be registered, companies are constantly having to keep up with different rates, different jurisdictional rules, sourcing rules. So some states obviously have rules around when you're selling into their state, which, if it's a destination-based or an origin-based sales tax, there's all sorts of rules that are constantly changing. And as your Nexus footprint expands, this becomes really, really complex to deal with. And then ultimately, as companies are having to deal with those first two changes, the costs are increasing. You know, if you've got to hire additional staff to help deal with some of these things, if you are outsourcing to a solution like Avalara, sometimes the cost will obviously increase. Audit risk increases, which is going to be a cost associated with that. There are so many different costs associated with the complexity that is happening. And so we definitely just want to talk about how maybe we can alleviate some of that later on in the presentation. So it's also important to really note that compliance ultimately is not optional, unfortunately. You know, when it comes to dealing with all of this, I know a lot of people I talk to, you know, consult with their CPA firms. CPA firms are great resources, typically in the state in which they're operating, but even a lot of CPA firms just don't fully understand the complexity of sales tax compliance. So, you know, it comes down to the burden being on you guys to keep up with these changes and figure out what you need to be doing. Audits are getting so much worse. So with all these complexities growing, it's very easy for auditors to come in and put the pressure on, even more so than normal, because as these rules and regulations get more and more complex, their job becomes a little bit easier because it's easier to point out things that you might be doing wrong. And then along with that, obviously, will come along with penalties and interest, potentially back taxes in some situations. If you're in a situation where you're selling directly to a consumer, back taxes can be a big challenge as well. So it's really important to make sure that you as a company are able to feel confident in where your Nexus obligations lie and that you're sort of handling that in an appropriate way so that you don't end up dealing with some of these things. So when I talk about this every single day, which I do have these conversations multiple times a day, sometimes with companies, a lot of the questions that I'm getting are related to why is this happening right now? Why are the states doing this? You know, we're a small company. We can't deal with this. This is too expensive to handle. And so I think it really is important to understand why all of these changes are happening. Why are the states cracking down on this? So I think one of the most impactful things that you can understand is that as we have grown to a society that does so much buying and selling remotely, that when states were only requiring companies to be registered where their office was physically located, and you've got companies that are shipping into multiple states. And I mean, think about all of the places that you personally buy from, as well as what your company is doing and potentially selling and shipping to. Half of a state's revenue, half, comes from sales tax. So ultimately, that has led to about $13 billion in uncollected sales tax revenue from just e-commerce. Now, I know a lot of my Sage customers are not necessarily focused on e-commerce businesses. A lot of them, you know, have grown to that aspect, but that's not typically the primary focus. But it is important to look at that number and understand that's just from e-commerce. So on top of that, you've got wholesalers and distributors that are also shipping across state lines and not collecting sales tax. And so even more uncollected sales tax is happening. And so that is why all of these changes have occurred. I mean, that's the ultimate thing that you need to understand. And as companies are changing how they sell, and, you know, even in today's landscape with the pandemic we're living in, people are changing how they sell, how they work. And so there's a lot of things that the states have had to make changes to in order to recover some of that revenue. So, you know, a lot of the companies I deal with day to day are growing, you know, hiring outside reps to potentially travel and work with, you know, trying to generate business in outside states. That's something I deal with a lot. A lot of even my wholesale companies are, you know, starting to grow their e-commerce side, starting a shopping cart. That changes things a lot for them. If you've got companies that are going through acquisitions or mergers, that is a big thing that changes Nexus obligations. And then, you know, the list goes on and on. Any big change to your business could potentially have a sales tax impact. So it's just important to understand that ultimately the reason that this is being looked at so heavily is that the states are losing so much money, and almost everything that you do in your business day to day, especially if you're growing, could potentially impact that. I'm going to pause there. Are there anybody have any questions at this point? I don't know if I see any coming through, Jody.
There was a question, but I think you've already answered it regarding what changes we can expect to happen because of the pandemic. And I know that you mentioned that states are getting greedier. How do you expect them to change maybe their sales tax audit processes?
So that is something that, you know, we're largely speculating on, but I think a big assumption that we as a company and just in this industry in general that we're making is that audits are going to get worse. Once we start to, you know, come out of the pandemic, you know, just like many companies have lost so much revenue and have struggled so much during this situation, you know, the state is as well, and they've got to recover money somehow. So I don't think that audits are kind of become easier when we get out of this situation. So, you know, I've been encouraging a lot of my customers to, if this is something you've been kind of kicking down the road, it's a good time to make sure that you're at least understanding, which everyone's taking a good first step in being on this call, to sort of understand if there's anything that maybe has been taking a back seat or anything that's being ignored, so that when and if audits start to occur again, you know, that you're prepared for that. So I definitely think that the COVID situation is going to make this more difficult. I don't think it's going to, I guess, water any of it down, if that makes sense.
Thanks, Alex.
Yeah. So let's talk more specifically about how can we create Nexus. So I think it's really important to understand that historically, Nexus was based on where your company had a physical presence. And a long time ago, that meant just simply where your office was. And I talk to companies every day that that's still their understanding. And so if anybody on this call is, you know, feeling the same way, know that you're not alone. A lot of people still think that you're only required to be registered for sales tax where your office is. So I'm going to talk a little bit in the next few slides about the Wayfair ruling, which I know a lot of people have probably heard about, but I think that it's important to start this conversation before Wayfair. So before the Wayfair ruling happened in 2018, the states had been obviously trying for years to accomplish what the Wayfair ruling accomplished. So before that, they were able to get that, they started to manipulate physical presence laws in order to try to recover some of the revenue. So, you know, whereas your office location was the only thing that would give you physical presence, you know, historically, that was no longer the case. And that has not been the case for a really long time. So in my 3 years at Avalara, this has always been the case. None of this is new. It's also, I think, goes back 5 to 10 years in certain states. So this is not new. But physical Nexus, for me, I most commonly see get missed through trade show attendance. That's a big one that people don't realize, that if you are sending anyone from your company to a trade show, and you've got a booth or you're advertising for yourself in some way, all states recognize that as a physical Nexus trigger. So that's a big one that I see get missed. Another big one is if you have out-of-state employees at any level, so whether they're a direct employee of the company or if they're even a contract employee, that can be viewed as a physical Nexus trigger. If you've got people that are going on site, so in the stage world, I've got a lot of, you know, customers that send people on site to do installations or to do trainings on new products, anything, repairs, anything like that is also a physical trigger. So, you know, this is a list here of some of the common ones, but the ones I just mentioned are probably what I see the most of. But, you know, if anyone has questions about this, please shoot them through. I'm happy to address it. It is important to note as well that some states have a lot of nuances around this. So it's not a black and white answer to all of these things. Some states don't necessarily view all of these things as triggers, and then some also have different parameters around it. So I know, like, Nevada, for example, does have some parameters around their trade show rules since they're such a heavily trafficked area for trade shows. So I think for them, I don't know the exact amount of time, but they have time restrictions. So if you're there for a day, that may not necessarily trigger the obligation, but in some states it does. So it's really complex to understand, but it is important to recognize, and the way I word it to most of my customers is consider if you or anyone in your business or your products are in another state on behalf of the company, that could potentially trigger a physical obligation. So another one is warehouses. I didn't mention that. If you've got outside warehouses and you're storing product in those warehouses, or if you're selling through Amazon and Amazon is storing your products in their warehouses, that's another one. So there's a lot of things like that that can trigger a physical nexus. So just kind of keep that in mind. There's two types of nexus. We've talked about physical at this point. The other type of nexus is economic nexus. Economic nexus is where the Wayfair ruling comes in. So for those that might be new to this conversation and have not heard about that, the South Dakota versus Wayfair ruling is a Supreme Court case that was ruled in June of 2018. It completely and totally rocked the sales tax world. So anyone that has heard of it, most people I've talked to, even if they don't know a lot about it, have heard of it at some capacity. What that court case accomplished was that it was giving the state the ability to set what they feel is substantial presence for a company to sell into their state. So there's thresholds that the states have been able to set on a per state basis. Each state was given the right to set their own threshold. So if a company is not having any physical presence whatsoever in a state, through the Wayfair ruling, now if you're simply selling into a state, you can trigger an obligation through your sales volume. So every state is different. There are a few states that have the same threshold. Generally, you're looking at a dollar amount, a common dollar amount with a few states. It's $100,000. There's some states that are $200,000. There are some states that are $500,000. For about 36 of those states, they're looking at gross sales. So even if you're selling something that's non-taxable, if you are selling and meeting that dollar threshold, you do establish an nexus. Other states are also looking at transactional volume. So the reason for that is they're not discriminating on small businesses or large businesses. If you're selling a small dollar item into a state, you can still potentially trigger that obligation through the transaction thresholds, which are typically set at 200 transactions. So economic nexus, the easiest way to think of it is if you are selling a certain amount of dollars into that state that state considers substantial, you can trigger a nexus through that, even without physical nexus. Looks like, Jody, there is a question that just popped in the chat.
Yeah, and it's a good one. If we have physical presence in a state, but also have e-commerce sales in other cities and counties in that same state, do we have to register in all of those other cities and counties?
That is a very good question. So when it comes to evaluating nexus, it is mostly viewed, and for the purposes of this conversation, it is mostly viewed at the state level. So you're not looking at the local levels, the cities and the counties. So when it comes to economic nexus, there are not thresholds set at the local levels. It's only set at the state level. So if you've got physical presence in a state and e-commerce in local cities and counties, typically the state will alert you if they feel that you need to be registered at a local level. So like Colorado is a big one as an example that, from what I understand, they will typically let you know if that needs to occur at a local level. But for the most part, if you're collecting sales tax, most of those rates that you're charging should include a state, a city, a county level rate that the state then takes and remits to the jurisdictions themselves. And that's a really complicated discussion, so I don't want to get too in the weeds, but I hope that at least answered at a high level. I would say, in short, you none of this impacts if you need to register at a local level. It's all state level that we're talking about today, and it gets a little bit more complex when you're looking at the local levels, but the state would typically alert you to that.
There are a few more questions about economic nexus, but I think we'll just let you go on, and you may end up answering them all anyway.
Okay. So something I wanted to touch on before going into the triggers as well, I think it's important, is that when it comes to economic and physical nexus, whatever happened first is what the trigger is. So if you're in a situation where you've had, salespeople traveling to states for years, there's no point in you going back and evaluating these economic thresholds. There's no reason to even consider it, because if you've had physical nexus, economic nexus doesn't matter. Economic nexus only matters if you have no physical nexus. So I think that also kind of touches on the question that we just had. If you've already got nexus for physical reasons, economic is just there to target companies that are not physically in those states but are selling a substantial amount of product. So common triggers, and I kind of touched on this a few slides ago, but I think it's important to look at it again. When I'm talking to customers, some of the things that are coming up a lot is if you're changing systems, a lot of times that, it means it's a good time for us to look at this, but also when you're changing systems, that can sometimes change your audit exposure. So if you're going from, maybe a smaller platform, and I know most of the people on this call are probably have been using the same ERP for a while, but if you're using an ERP that doesn't necessarily keep up with the right billing and ship to addresses, then that can sometimes create audit challenges. I've seen that. E-commerce growth is a huge one. If you are a company that is a manufacturer or a distributor that has been only selling, B2B and selling to people who are exempt from paying sales tax for some reason, and you're getting ready to launch a e-commerce site, always have this conversation before launching the e-commerce site. Now, obviously, I talk to people all the time who have already launched their e-commerce site, and it's not that it can't be fixed at that point. It just becomes a lot more complicated to backtrack when you're starting to launch e-commerce and then go back and evaluate Nexus. Because if you've had Nexus and you start selling into a state and you're not collecting tax, all of a sudden that becomes liability. Whereas if you evaluate it on the front end from day one when you launch that e-commerce site, you can go ahead and know that you need to be collecting tax. So that's a big one that I deal with a lot. If you are selling more into more states, if you're going to be growing different locations, if you're hiring employees that are going to be working outside states, I know I've mentioned a lot of these already, but I think it's important to reiterate any big changes to how your company sells or where your company sells. It's probably a good idea to have a conversation about how that could be impacting your Nexus. So the big question I get, and maybe a lot of people have this question on the phone, what if what I'm selling is mostly tax exempt? So this in the Sage world is something that comes up a ton. I've mentioned already that with economic thresholds specifically, they are not discriminating against companies that are selling to exempt customers. They are looking, I think 36 of the states is the number that are looking at gross sales. So if you're meeting those thresholds based on your gross sales, even if it's not a taxable sale, you do have an obligation to be registered in that state and reporting on your sales. Now, you may not necessarily be collecting sales tax, but you do have an obligation legally to be registered and reporting. So that kind of gets us into, what do I have to do then to manage this if I'm not collecting sales tax? And that comes down to managing exemption documents. So I've referenced some case studies here. We are certainly going to share this deck with you guys after the call, but we have a variety of case studies. And for me, I've worked with a lot of companies that I could share specific stories on who, have had situations with exemption documents. And so I think that that's, the important thing to note that if you are a company that is not collecting sales tax because your customers are not are tax exempt for some reason, whether they are a reseller, whether they're a nonprofit, whatever reason they might be exempt from paying sales tax, or if the product you're selling itself is exempt. Typically, you have to manage some sort of exemption. So for the purposes of this slide, let's talk about if your customers are exempt, what does that mean? It means that you need to have an exemption document on file for that customer, because if you have a nexus in a state and you register for sales tax, that means that at that time, your obligation in every single transaction that you sell becomes to either collect sales tax or collect an exemption document from the customer. So a lot of my customers, this is what they're doing every time. They're not necessarily ever dealing with sales tax. They might be just dealing with exemption certificates. So I think it's important to understand some of the challenges people face when it comes to managing these documents. For me, a lot of the stuff that comes up is that there is a lot of friction during that collection process. If you've got salespeople who are responsible for collecting the documents, a lot of times they might be lazy in doing that. They don't care what they collect. They don't even look at what they're collecting from the customer as long as they can close that sale. So, then the accounting team ends up having to, sort that mess out, reach out to people, ask for faxes. There's a lot of back and forth involved in that process. You've got customers who you might ask for the document and they don't even know what you're asking for, so they're sending you the wrong form. A lot of companies I deal with have all sorts of crazy ways of managing the documents once they've gathered them. I had someone tell me one time that they were all piled in a shoebox under their desk. So it's definitely a difficult process to manage. The other thing to consider is that along with the sales tax complexity, which a lot of people, as you expand into different states, start to think about all of the rates you're going to have to keep up with. The thing about exemption certificates is that there are many complexities around this as well. So if you are dealing with multiple states, some states have very specific documents for the different reasons you might be exempt. A customer I was actually dealing with a couple years ago, I have a quick story I'll share, that they were a smaller company that was selling to Home Depots across the country. Home Depot was their largest customer, so I think about 80% of their business was for resale. They had collected an exemption document from Home Depot's headquarters that was just a multi-state exemption document, which some states do accept those. They're fine in some states. However, the state of North Carolina, Home Depot, went through an audit the year I was working with this customer, and it was found that they had not been properly remitting their use tax, so they weren't self-assessing appropriately. So the auditor ended up digging deeper into the documents they were actually presenting their vendors. Turns out, long story short, that North Carolina has a really specific resale document that you have to have on file. So if you're selling to a company that's operating out of North Carolina, they have their own resale document you need to have on file. My customer didn't have that. So they ended up paying $150,000 in Home Depot's audit for having one wrong document on file. So it's a really extreme situation. I don't come across things like that very often, but I think it really illustrates that there are a lot of complexities with managing these documents, but it is a really important part of tax compliance if you are registering in more states.
Alex, I think we were going to launch a poll here, were we not?
Yep. Yes.
Okay, so before Alex starts talking about this slide, I just wanted to launch our first poll, which is a very short question with just one answer. You've got three options. Here comes the poll. So where do you feel your organization falls currently from a sales tax compliance standpoint? You've got three options there, so please choose your option. And while people are answering that question, we've still got about...
I can go.
Why don't we go ahead and start talking about this next slide while those responses are coming in?
Yeah, so, the last piece of tax compliance, we have kind of broadly touched on the rate aspect, the Nexus aspect, the certificate aspect. You know, as you expand into more and more states, if that is something that's going to happen, you know, as a result of economic or physical, something that a lot of customers start to panic about is, how am I going to file all of these returns? And so, you know, there are a lot of complexities with this. With filing sales tax returns, you have to deal with different filing calendars for every state you might be in. You know, some states might put you on annual, some might put you on quarterly, some might be monthly. Some states like California require prepayments in addition to your returns. So there's a lot of different calendars you have to keep up with, on top of having to manually pull reports out of your ERP, you know, get those prepared in order to go to each state website and file, having to deal with tax notices that are going to come in from the state. So this is just something that, you know, a lot of people start to panic about. This can be really time consuming. And so, you know, the last two slides, I've talked about some of the challenges that you might face. So I definitely want to wrap this up in the next, you know, few minutes with just kind of explaining to you, you know, how can you go about all of this without dealing with these challenges at such a high level. So, Jody, let me know timing-wise where we're going to fall on the poll before I proceed.
Let's go ahead and give the responses to the first poll. The question, where do you feel your organization falls currently from a sales tax compliance standpoint? We've got some rock stars out there. 29% said that they would ace an audit. So I like that confidence. The remainder of the respondents said we are sweating a little bit and have room for improvement.
Okay. That is a common response, I would say. So, you know, now that we've done that, let's talk about, I'm glad to have that number. So you said 29% feel good. The rest of them are a little bit kind of feeling iffy right now. So how can you deal with all of this if you're feeling iffy? So as Lara, if anyone has ever talked to us before, you know, we ultimately are a sales tax solution. So we do have a software, and, you know, I'm not going to get too much into our software today. Anyone that wants to have more discussions, please reach out and we'll talk. But I think for today's purposes, you know, we've talked mostly about Nexus. So I think it's important to understand, if you've got questions around Nexus, what can I do to address this? Typically, what most customers start with, if I'm working with them when there's questions around this, is to do a Nexus study. This is something that our tax advisory team internally offers. I have sold, I think, between 18 and 20 Nexus studies just in the last 4 months. It is a very, very commonly purchased product from us. We have a really competitive price on it, and we get them done really quickly. But ultimately, what the Nexus study is it is a questionnaire that we give you access to, that you would go through and answer very specific questions about business activities that are happening in every single state. So after you have answered those questions, we take that information and we convert that into a very detailed report explaining to you exactly where you have obligation and why that obligation was created. Now, the why is really important, because the why gives us an indication of the time frame. If it's something that's physical, you know, a lot of times that could be something that goes back, you know, 2, 3, 5 years, whatever it may be. And if that's the case, there is a different evaluation that needs to be done versus if it's economic nexus, and you can nail down that that happened on the exact effective date that the state listed for economic nexus. So economic and physical, it's important to kind of identify what triggered the obligation so that we can help kind of direct you into if any more homework needs to be done. So a part of that Nexus study, we've actually recently changed it at the beginning of this year. It also includes a 12-month tax exposure analysis. Now, that is falling into this 4 to 5 day range. So the tax exposure analysis that's included in the Nexus study goes back 12 months. So we're going to ask questions in that survey that is going to be related to your sales volumes. And so through that, what we'll do is make an estimate of what your total tax liability might be over the last year. In most cases, I would say 90% of the customers I deal with, that 12-month estimate gives us what we need to know to ultimately recommend what your next step should be. So in some cases, you might not have a lot of liability. You might be good to just go ahead and register in that state and easily get into compliance. Other companies I deal with might have liability. Liability comes in two forms. If you're a company that is dealing primarily with exempt customers, the liability can easily be covered by going back and collecting exemption documents from your customers. So being able to lay this out through the Nexus study, it gives you a way to sort of prioritize the project. If you've got a lot of exposure in Texas, you might start with your Texas customers and collecting those exemption documents and going back to get those. The other type of liability is actual tax liability. So if you have been selling to end users and you've had Nexus for an extended period of time and not collecting tax, that is where it could get expensive. If you've got actual tax liability, we make an estimate on what the total worst case scenario you might owe to that state. And so that's going to include any penalties and interest that the state would inflict. Sometimes penalties can be up to 20 to 50% of the tax rate that is, or the uncollected tax. So it can get really expensive for some companies. So in cases where that is what's going on, there are voluntary compliance services that we can assist with. So one of those is considered, or is called a voluntary disclosure agreement. So that is an amnesty program that all the states offer that allow you to enter a state with penalty and interest abatements. And also it is a negotiation between the state and us to try to get those fees down. So in some cases, if that's necessary, we can help eliminate all of the costs that might be associated with entering that state and getting into compliance. So there's a lot of things that can happen as a result of that Nexus study, but ultimately it gives us information to help provide you guys with guidance on what you should do as the next step. In some cases, that 12-month exposure analysis might not be enough. And in those cases, we might do a more in-depth tax exposure analysis. That's something that takes about 4 to 6 weeks to complete. And through that, we're going to go back further. We go back about 4 to 5 years into your tax exposure to look deeper at how much liability you might have in states. I would say most customers don't need that. Most of the customers get sufficient information from just the Nexus study. And while it does say 4 to 5 days, in the last 3 months, those have been coming back in about 1 to 2 days. So they're really, really quick turnaround on those. Once the Nexus study is complete and we have the number of states that we're looking at, we can talk about how are we going to deal with this every day? That's a big question. A lot of companies don't want to evaluate their Nexus because they know they don't have the internal structure to be able to manage, 20 additional states. And so that's where our software comes into play. Our software does automate all of this. So, we have a pre-built integration into Sage. I think there might be a few NetSuite customers on the line as well, so I don't want to discriminate against you guys, but we also have a pre-built integration for NetSuite. With both of those integrations, we're able to fully override the native tax functionality in those platforms. So it eliminates you ever having to touch a tax schedule again. All of the tax schedules will be maintained by us. So if you go from, 2 states to 20 states, there's not going to be any change to your day-to-day other than the fact that you don't have to deal with any sales tax at all. We are going to automatically calculate sales tax within your invoices within Sage or NetSuite automatically. We also have a tool that makes managing your exemption certificates much easier. So our tool called Cert Capture gives you an automated approach to collecting and managing those exemption documents. And then also, we have a tool that automatically files your sales tax returns. So we do offer an end-to-end compliance solution. So, if your hesitation in evaluating Nexus is that we can't handle this if we have more Nexus, our software is what will help with that. We will be able to automate all of it so that you don't have to change anything about your day-to-day. And ultimately, you will be, getting into compliance, reducing your audit exposure. If an audit comes after the pandemic, If you're set up on Avalara, audits are going to become so much easier. And I can talk to you guys more in depth if anyone wants to reach out about, how exactly that is. But ultimately, I think the Nexus study is typically a great first step to figuring out what do you need, if anything, and helping you sort of understand where you stand from a tax scenario. So for those of you that raised your hand, said you're sweating a little bit, the Nexus study is a very big help in helping you understand how much do you need to sweat, or is this maybe a non-issue.
So Alex, that's a perfect lead in. Before we get into more of the Q&A, because we do have some other questions coming in, I want to launch our next poll. This one is a single question, but it can have multiple answers. So if you do feel that you need help, what areas are most concerning to you? And this is, you can select as many as you like. We're just trying to get a feel for those of you that are sweating a little bit, what areas are concerning to you? So please respond to the poll. Got some votes coming in. This is exciting to see. So Alex, I was going to say while we're waiting,
I wanted to say something about the Nexus study. An interesting statistic that our tax advisory team pulled for us is that 81% of our customers that come to us questioning economic nexus, again, because the Wayfair ruling was so publicized, 81% are assuming they have economic nexus, but the Nexus study ends up uncovering physical nexus, 81%. So, think about how many people that we're selling Nexus studies to that just are absolutely clueless that they have physical nexus in states. So, if you're thinking you only have economic nexus, the Nexus study can be really, really enlightening in helping you understand that. And I actually completed a Nexus study process for a customer last week that they were registered in 2 states, and it ended up that they needed to be in 33 states. And that's honestly kind of typical. I would say 99% of the Nexus studies that I complete for or I don't complete, but our tax advisory completes for my customers, we're finding some surprises there. So it's a really good tool to help you better prepare for what you guys might need to be doing.
We do have somebody that answered other. It looks like at least one person said that they have concerns around others. So whoever answered other, I can't see who you are. So go ahead and pop that into the Q&A. Let us know what those concerns are so that we can ask Alex while we have her live on air. While we're waiting for more of those clarification questions to come in, we do have question number 1. What is the cost of a Nexus study? I knew that was coming.
Good question. So the Nexus study cost typically is $4,500. So that $4,500 is us looking at all 50 states and evaluating your Nexus, giving you the reasoning for your Nexus obligation being triggered, and us also including that 12-month exposure analysis. So most companies, when they get that report back, it can range from anywhere from 20 to 60 pages, depending on the results. So it's a really in-depth report. I will share that, Jody, with you after this call so we can forward that to attendees so they can get an idea of what that deliverable looks like. But we are offering 50% off of the Nexus studies for the webinar attendees today. So if anyone on this webinar would like to purchase a Nexus study, you will get that for 50% off through July.
Great, and I think that you're probably going to have a couple of people take advantage of that at least, because I have the poll results in. 33% of attendees are concerned with Nexus, have no idea if they are registered in the right place. 33% have no idea if they're handling exemption certificates correctly. 17% of attendees are concerned with returns filing, and 17% are concerned with other, but I still don't know what other is. If you want to pop that into the Q&A, I'm going to go ahead and end the poll. So
for those that put that stuff in. You know, I would love to have a one-off conversation and talk about this all more. So Jody, I don't know if we're able to see who put that in, or if we just want to make sure we share our contact information. I'd love to schedule a 30-minute conversation. I can, you know, provide more consultative advice for your company specifically. I would be happy to have that conversation.
Yep. If you want to move to the next slide, Alex, I think that has our contact information on there. So we'll just leave that up there so that people can grab it. If you're interested in learning more about specific services for your organization, or exploring the option of doing a Nexus study, feel free to reach out to me, Jody at oasisky.com. I will coordinate with Alex, so just come to me directly, and then I can get some background information and get that over to Alex.
Yeah. And I just want to let everyone know who's on this call, this is probably very candid. This is not actually, we didn't set this up as like a marketing webinar. So you guys should not receive like harassment emails from Avalara based on this. The only people who have this information is myself and Jody. So I would really, really encourage any of you that have questions, don't hesitate to reach out if you've got questions. We're not going to be harassing you into buying something. You know, most of my conversations are strictly informational day to day, and Jody can attest to that. We have conversations with customers a lot just to kind of help them figure out where they stand. So just know that if you reach out to us, you're not signing up for marketing emails for the next 5 years of your life. We'll just answer your questions and move on from there.
Somebody appreciated that and put it in the chat window. We have more questions coming in. You ready for a question, Alex?
Yes, absolutely.
Does Avalara offer the ability to track combined Nexus thresholds for multiple companies that file under the same tax ID? Oh. Yes, we do.
And I'm trying to read this to make so multiple companies that are filing under the same tax ID. So I think Sarah asked this question. So Sarah, I would want to have a conversation. I would want to understand more about how the companies are set up to answer that specifically, because the answer could depend. A lot of answers to sales tax questions, we joke a lot, are always, it depends. It's going to depend on your exact scenario, how we would do it. But the short answer is yes, we would be able to track that.
Great, thanks. Keep those questions coming. Is there another one? This is an incurious crowd. I don't see any more. Oh, wait a minute, here's one. How do you evaluate economic versus physical nexus? Really broad question. I think the more confusing one is actually economic nexus. So how do you start to evaluate economic nexus?
So economic nexus is actually simpler than physical nexus. If you're in a situation, and I have customers who, you know, when we go through some of the triggers that are common for physical nexus, if you truly feel your company has no physical nexus whatsoever, you're not doing any of the things that we mentioned physically, economic nexus is pretty easy to evaluate. So I can share a page that on our website, we have every single threshold listed out by state with details around what each state's looking at. So you can just simply pull some sales reports out of your ERP and evaluate that against the threshold. So if a company only has economic nexus, typically I don't even recommend doing a nexus study unless you just don't want to have to look at it yourself. But it is something you can look at yourself just by going through those thresholds. Now, the Nexus study is the other answer to that question. If you have physical and Nexus and there's a mix there, the Nexus study is really the best way, because when you go through and answer the questions, we're going to evaluate what the trigger was. And so that's how you figure that out. You know, what event occurred first? Did it happen because of economic nexus, or did it happen because of the physical nexus? And so through the Nexus study, we're able to help you determine what happened first.
Great. Another question. That customer that you mentioned that has to now register in 33 states and they're only registered in 2, how do they go about registering in 33 states?
we can do that for them. They're using us to do it. There's multiple ways that it can be handled. And for them, they have a few states where they have a lot of liability they're not comfortable with. So they're going to be doing voluntary disclosures for a couple of those states. Voluntary disclosures are the amnesty program that I spoke about, where you're entering the state anonymously. Ultimately, that is a type of registration. And then the rest of the state, they're having us register for them. So we do state registrations on behalf of companies, and we get those done in about 2 weeks. So we're just doing them all for them, and they should be done with all of it within a month or so, between the voluntary disclosure and the standard registration. Now, if you want to do them yourself, you just reach out to the state and register. That it can be a tedious process if you're dealing with a lot of states, but it's not impossible. And so, you know, typically I would work with you to kind of understand what sort of bandwidth you have and help guide you guys in what the right direction would be for your company.
Speaking from experience, I never ever want to have to register in the state again. Back when I was doing that, I wish I had known about Avalera because I would never have done it. Well worth it to have you guys do that service.
Yeah.
Alex, I don't see any other questions. So I think we're about ready to wrap up unless somebody wants to pop a question in there really quickly. Any closing thoughts, Alex?
No, I will. I'm going to share, and Jody, I'll touch base with you, make sure we've got all the information squared away to send out to the attendees. Like I said, we'll send an example report of that Nexus study deliverable so that you guys can check that out. We'll include the details of the 50% off, and that will be through the end of July. And then the economic thresholds, I will share that as well as the deck. So, but please reach out with any questions that you guys have. I'm happy to have a conversation.
Great. Well, thank you so much, Alex, for the Nexus 101 presentation today. And thank you to all of our attendees for taking some time out of your day to learn more about sales tax compliance. And you've got our contact information. If you want any to evaluate any of these solutions or have additional questions after the webinar, please reach out to me or Alex. And we look forward to working with you. Have a great afternoon.
Thanks, everyone.
Bye.